I used to check my bank account after every payday and feel a knot in my stomach, not because I was broke, but because I saw my hard-earned money, that precious input stream of my efforts, being siphoned off by taxes before it even hit my full control. It felt like I was running a high-performance system, but there was a constant memory leak, draining my financial RAM. With every transaction, every paycheck, I was working harder, earning more, only to see a larger chunk disappear. It was a frustrating, almost demoralizing cycle, leaving me feeling stuck in what I now call the prison of almost enough. But then, I began to see a different pattern. I observed the truly wealthy, not the flashy influencers, but the quiet, generational wealth builders. They weren't just earning more. They were operating under a completely different financial operating system. They weren't avoiding taxes illegally. They were simply interacting with the system architecture in a way most of us aren't taught. And what I discovered was a legal, profoundly powerful feature within the system that allows them to minimize their tax burden, sometimes to near zero, while simultaneously accelerating their wealth. This isn't just theory. It's a fundamental understanding of how money, assets, and the tax code intertwine. And today, I'm going to pull back the curtain on this often misunderstood mechanism. My hope is that by the end of this, you'll have a clearer roadmap to upgrade your own wealth algorithm, if this logic computes for you. If the idea of debugging your financial life resonates, please signal the algorithm by hitting that like button. It tells YouTube this content matters, and it helps more people break free from their own financial memory leaks. For years, I believed in the concept of a fair share. I worked a demanding job, paid my taxes, and watched my salary grow. Yet my net worth often lagged behind my income. It felt like every step forward financially, the taxman took a step and a half. This isn't just my story, it's the experience of countless professionals, entrepreneurs, and ambitious individuals in the upper middle class. We're caught in golden handcuffs, earning enough to feel comfortable, but not enough to truly break free from the perpetual cycle of exchanging time for taxable income. We're excellent at generating active income, that steady input stream from our jobs or services, but our financial operating system is designed to heavily tax this kind of income. The rich, however, understand a different fundamental principle. They often shift their primary input stream from active income to passive income derived from assets they own. And this, my friends, is where the system architecture fundamentally changes. It's like trying to run a high-demand application on a slow server. You can keep throwing more bandwidth at it, more hours, more effort, but the underlying architecture limits your efficiency. The wealthy optimize their architecture, not just their effort. They're not just earning, they're owning, and the distinction between earning income and owning income-generating assets is where the magic, or rather, the deliberate design, truly unfolds. Let's be clear, we're not talking about anything illegal here. This isn't a secret handshake or an offshore account. This is about understanding the fundamental design parameters of the financial operating system itself. The hidden tax loophole isn't a glitch in the code. It's a feature that most people, especially those earning W to income, simply don't realize exists or how to utilize. The core of this strategy revolves around depreciation, particularly within real estate, but it applies to other asset classes too. Think of depreciation as the system acknowledging that assets wear out over time. Even if your property's market value is increasing, the tax code allows you to deduct a portion of its value each year as an expense. This isn't just some accounting trick, it's a powerful mechanism. When you own income-producing real estate, for example, you generate rental income. But then, you get to deduct expenses, mortgage interest, property taxes, maintenance, and crucially, depreciation. This depreciation creates what's often called a phantom loss on paper. Even if your property is cash flowing positively, meaning money is coming in, your tax return might show a loss. This loss can then be used to offset other income, including, for some, even their active W to income. It's like having a built-in system optimization that reduces your taxable load. This is the bedrock of how many wealthy individuals legally pay minimal taxes, sometimes even showing a taxable income of zero, all while their net worth continues to climb. They've learned to work within the system architecture, not against it. Let's dive deeper into this wealth algorithm. Imagine you purchase a rental property. It generates $2,000 a month in rent, or $24,000 a year. After mortgage interest, property taxes, insurance, and maintenance. Let's say your actual cash flow is $5,000 positive for the year. Great, right? You'd expect to pay taxes on that $5,000. But here's the game changer: depreciation. Let's say the depreciable value of your property excluding land is $275,000. Over 27.5 years, the IRS standard for residential real estate. You can deduct $10,000 per year to 7.5. 27.5. So, on paper, you have $24,000 in income. Minus your actual cash expenses, let's say $19,000, leaving $5,000 cash flow. But then you also deduct that $10,000 in depreciation. Suddenly, your taxable income from that property isn't $5,000 positive, it's $5,000 negative. This passive loss of $5,000 can then be used, under certain conditions, to offset other passive income. And if you qualify as a real estate professional, in the eyes of the IRS, which involves spending a significant amount of time on your real estate activities, these passive losses can even be used to offset your active W-2 income. This is like a massive software patch to your tax code, drastically reducing your tax liability. It allows you to build wealth, generate cash flow, and simultaneously reduce the tax burden on your other income streams. It's a strategic calibration of your financial real-time telemetry, understanding that cash flow and taxable income are not always the same. Wait a minute, are you hearing this for the first time? Does this make you feel like you've been running on an outdated operating system for too long? This isn't a conspiracy, it's simply a different set of rules that most people aren't taught. Take a moment to digest this. This changes everything about how you might view income and wealth. So, how do you start integrating this into your own financial system architecture? It begins with a fundamental shift in perspective from solely being an earner to becoming an owner of income-producing assets. Educate yourself. This isn't a set it and forget it system without knowledge. You need to understand the nuances of real estate investing, tax codes, and financial planning. Think of it as upgrading your internal predictive analytics engine. Start small. Use sandbox mode. You don't need millions to begin. A duplex, a small rental property, or even a fractional investment can be a starting point. Use sandbox mode to test the waters, understand the mechanics, and build confidence before scaling. Build your team, your API integrations. You'll need a savvy CPA who understands real estate and passive activity rules, a good real estate agent, and potentially a lawyer. These professionals are your API integrations, ensuring your system works seamlessly and efficiently. Don't try to debug this alone. Track your real-time telemetry, understand your cash flow, expenses, and specifically, how depreciation impacts your tax liability. This isn't just about making money, it's about optimizing your tax efficiency. Set up cron jobs for automated savings and reinvestment to ensure consistent growth. This strategy isn't about getting rich overnight. It's about systematically building a financial firewall that protects your wealth, minimizes your tax outflow, and allows you to compound your assets more effectively. It's about leveraging the rules of the game to your advantage, rather than letting the rules disadvantage you. As with any powerful financial tool, there are pitfalls. The first is data corruption. Bad advice from self-proclaimed gurus promising overnight riches without any effort. Wealth building, especially through strategic tax management, requires diligence, patience, and a solid understanding of fundamentals. Don't let misinformation pollute your neural network of financial decision-making. Another trap is allowing memory leaks to persist in your personal finances. This is the bloatware that comes pre-installed in many lifestyles: unnecessary subscriptions, impulsive luxury purchases, and spending that doesn't align with your long-term goals. If you're leveraging depreciation to save on taxes, but then squandering those savings on discretionary spending, you're undermining your own wealth algorithm. Every dollar saved from taxes, intelligently reinvested, has the potential to amplify your future gains. Focus on data integrity in your financial decisions. Ensure your investments are sound, your deductions are legitimate, and your overall strategy is robust. The goal is to build a resilient system, not a house of cards. Don't let lifestyle creep negate the powerful advantages you're building. Remember, the rich aren't just good at earning, they're masters of retention and reinvestment. Have you ever felt like you're speaking a different financial language than those who seem to be effortlessly building wealth? This isn't about intelligence, it's about access to information and a willingness to understand a different operating system. If this is opening your eyes, think about who else needs to hear this. This isn't a one-time fix. It's a continuous operating system update for your entire financial life. Building wealth through asset ownership and strategic tax planning is a marathon, not a sprint. It requires patience, consistent learning, and a commitment to understanding and refining your automated workflow for wealth creation. The rich understand that money isn't just a medium of exchange. It's a tool, a resource that can be deployed to generate more resources. They've mastered the art of letting their assets work for them, while simultaneously minimizing the tax load on those efforts. This creates a powerful feedback loop. You invest, you generate income, you use depreciation to lower taxes, you reinvest the savings, and the cycle continues, accelerating your journey towards true financial independence. My own journey, from feeling stuck in the prison of almost enough to understanding and implementing these strategies, wasn't without its challenges. There were moments of doubt, complex forms, and the need to seek out expert advice. But every step was a vital debugging process, refining my approach and solidifying my financial firewall. This isn't just about saving money on taxes, it's about empowering yourself, taking control of your financial destiny, and ultimately, building a legacy. It's about recognizing that the system architecture isn't inherently against you, but it rewards those who understand its design. The hidden tax loophole isn't a secret cheat code. It's a profound understanding of how the financial operating system rewards asset ownership and strategic investment. It's about moving beyond simply earning a paycheck and stepping into the world of owning income-producing assets. It's about using tools like depreciation to effectively reduce your taxable income, even while your real wealth grows. I want you to leave this video feeling not frustrated, but empowered. You have the capacity to understand and implement these strategies. You can re-architect your financial future. It requires dedication, education, and the courage to challenge conventional wisdom. But the reward, true financial freedom and control, is immeasurable. This isn't just about saving a few bucks. It's about changing the entire trajectory of your life. It's about finally escaping the prison of almost enough and building the wealth you deserve. If you're ready to implement these system upgrades, make sure you hit that like button to signal your commitment. Subscribe to the channel for more insights like this. Leave a comment below with your biggest takeaway, and share this video with someone who also needs to understand this powerful truth. And to continue your system upgrade, click the video YouTube is recommending on your screen right now.